Good morning and welcome to the market forecast. It is Monday, May the 17th. I'm John Hoagland. As always, thanks for trusting me with your time. I have missed everybody. I have missed the markets, been out for a week. Really didn't pay too close attention to what was going on, just really kind of separated myself from the markets and had a nice relaxing time. And I'm ready to get back into the markets today. And let's see, what we've got going for us. As always, we're going to be hoping for accurate context for you as far as good risk management, as well as maintaining good patience. As far as economic numbers this week, let's take a quick gander at what we're seeing this morning and for the rest of the week, of course. The Empire State Manufacturing Index came out at 7:30 this morning. Not probably all that impactful, although we do see these equities markets heading back to the downside. Housing market index 9 o'clock this morning, also not expected to be highly impactful. There are a couple of talking Feds throughout the day. Today, tomorrow, housing starts and permits probably going to be a little bit more impactful as lots of eyes are on the housing sector. Got a couple of talking Feds again tomorrow. Wednesday, petroleum status report is 9:30 a.m. as always. The FOMC minutes due out at 1 o'clock on Wednesday, always 2 weeks after the release comes out. We do have Bullard speaking on Wednesday at 9 o'clock. A few talking Feds throughout the whole week this week. Jobless claims, 7:30 Central Time on Thursday as usual, as well as long as Philly Fed Manufacturing Index, some short-term note and bill auctions. Again, talking Feds throughout the day. Friday, PMI composite and existing home sales, along with a few talking Feds throughout the day on Friday. So lots of information due out, lots of Fed presidents and talking Feds, I like to call them, speaking throughout the week. So it's going to be a week that I think we're going to be a little bit sensitive to headline risks, people saying things happening. I'm sure that we're all well aware of the hostilities that are going on over in Israel with the Palestinians. That's going to keep the markets on notice. Of course, I know that we're all going to be praying so that we can find some peace and resolution in that whole region and in the whole world. Really, I know that that's one of my daily prayers, is that we can find some peace in the world. But as far as stocks are concerned, they've put the seemingly eternal rally on hold a little bit here as inflation continues to threaten growth. A little problem with the cryptos, most of all Bitcoin. Elon Musk has knocked it for its environmental impact. I'm a little out of practice. Citing the use of coal for the electricity that's needed to mine for Bitcoin. So he says he's not going to be buying anymore. I don't know if he's sold any yet, but it's got sent it for a little bit of a loop this weekend. AT&T is on the verge of creating another streaming giant. They're talking about combining Warner Media and Discovery to create around a $58 billion streaming company. That's what the estimation is, at least. And crude prices have been range-bound, confident on demand recovery. Make sure that you like, share, comment, question, feedback, and heckling are always welcome here at the Market Forecast. Taking a look this morning, VIX up 10% this morning, 2059. Some fear coming into the marketplace as equities tend to go to the downside. VIX tends to go to the upside. So a little bit of fear in the markets this morning. Dollar index 90.31, pretty much flat from the close on Friday. And the 10-year yield right where it was when I left a week ago, 1.64%. So, again, I'm happy to be back with you. I've missed everybody. It's really nice to get away, and it's also nice to get back to business. I'm going to put in the link for group coaching, which is Wednesday at 1 o'clock, or just about the same time those FOMC minutes come out, but wasn't able to do it. I was out of the office last week. Tried to let everybody know. I got a couple of emails like, hey, where are you? But we're going to be doing it this Wednesday, absolutely for sure. I've got a couple of emailed in questions I'll be setting up to answer those first. You can always email me questions ahead of time, and you can always ask questions on the fly. So group coaching again Wednesday, 1 p.m. Central. Always like to see who is with me this morning. Theo, first in the room, you win the prize. Theo, it's great to see you. James, Torres, my brother Rick, good to see you. Thank you. It is good to be back. Cesar, Ednelson, Vince, Jim, Subconscious 1000, good to see you. Brian, Vici, Richie, Keith, Greg, Felix Escobar, the famous. Josiah, good to see you. James, George, thank you. It's good to be back. KM, me too. Just got back from your honeymoon. Well, congratulations, Vici. That's wonderful. Congrats. Welcome to the club. The chef, Mike Magallanes, is in the room. Good morning, chef. Colin, Troy, Mr. Shine's Mystery Channel. JD, good to see you, sir. Colin, good to see you. Danny, Norman, Brad, Lamus. It's good to be back, Lamus. Thank you very much. Friday's COT report showed longs exiting and shorts increasing. Open interest the volume was quite low. How do you interpret this? Well, I got to take a look at what, number one, I think you're talking about the S&Ps. I know we had a pretty good boost in, no, not the S&Ps, crude oil I think you're talking about, right? Let me know if that's correct. Yes, talking about CL. Okay. We got to remember, crude oil is in rollover. Today is rollover for crude oil. I'm going to start the day. I'm going to trade the June contract because it showed a little bit more volume this morning. But by the end of the day, the July contract will probably have more volume in it. That increase in open interest may have as much to do or more to do with rollover than anything becoming too directional. Now, we did have a pretty good up move off of a kind of a previous weekly kickoff low. This week's weekly kickoff low is pretty near that area. So, is there an indication that we may have new buyers into the marketplace? It very well might. Now, the things that I'm going to be talking about when we get to the charts in crude oil is with the low volume and the increase in open interest. Showing longs exiting and shorts increasing is something that would have been happening throughout the entire week. On Friday, it seems as though with that open increase off those lows, maybe we got a little bit too short during the week last week, and some of that may have been kind of getting out of some of those shorts. Again, a lot of that open interest is blurry because of rollover. So it's always subject to interpretation. Everything is subjective. I'm more focused on open interest in crude oil when it's not rollover. What happens after the next couple of days when the market has really rolled over into July? It's going to make things a lot more clear as far as open interest and volume are concerned. Commitment of traders, showed longs exiting and shorts increasing. Friday, I would think that if that's the case, then we saw some of those shorts get a little bit nervous and bail out, and perhaps bringing in some new longs into the marketplace. Amanda, I have a question. If settlement isn't touched, is it common for it to touch the following days? Amanda, the settlement price for me, moving past the current day. We're going to see an inventory adjustment in gold this morning. The market opened with a lot of overnight weaker hands longs, and the market has been driving back towards that settlement level. But tomorrow, Friday settlement level isn't going to hold very much water for me. What will is if we don't get to point of control or value high or value low or ends of the ranges. So settlement for the current day. For Friday, it's going to be impactful. Tomorrow, Friday's settlement number won't be that much of anything that I'm going to look at. It doesn't mean that once in a while you're going to see the market move to a previous settlement level, and it might end up being a good level. But it's not one that I'm going to necessarily focus on. France, good morning. Sharon, Jason, Trading Research, good morning. It's good to be back. Frederico, good morning. Hello there. PD, Legend, good to see you. All right, so just happy to be back with you. I've missed everybody. Hopefully you didn't miss me too much. And let's take a look at the charts now. Let's see what we got going on. They seem to be stable for me this morning. So that's a good way to start. This is the daily in crude oil. Again, I'm looking at June, the July contract. They're basically trading at parity. They're about the same price. So I'm not going to have to change any of my current levels when I kind of look to move into the July contract. Today you can trade either contract. Either are fine. There's no, again, need to change any levels necessarily if you're going to be switching to July from June. Again, prices at parity. So kind of looking here, we've been in I'm going to call this kind of a medium upward movement here. Okay, we got longer term upward. This most recent pullback, we're putting in higher lows, we're putting in higher highs. We took a look at this trend line last Thursday, Friday. We had some buyers come back into the market again, as Amanda was talking about, thinking maybe we got a little bit too short in the hole down there, and that's why we had this move to the upside. And again, that open interest could be largely in rollover related. So what are we looking at this morning? I've got these pink lines here that are representing the entire range from last week. We're relatively centrally located in between them. We're centrally located between weekly kickoff high and weekly kickoff low, which leads me to believe that if we do have buyers coming into this market, they're looking for opportunities to buy weakness, as we all should be when in a market that is moving higher. But we're not near any of those levels. I'm looking at this as a market that is probably largely in short time frame control. So I'm going to be looking for opportunities using shorter time frame levels. I'm going to be looking at the 30-minute chart here. There are so many targets on both sides of this market. Now, we've just opened, and it looks as though we've left the opening range at the low of the session. We opened in range and in value. Look at what happened here, Amanda. Settlement is up here. Settlement in the crude oil was 65.37. We kind of bracketed it all night. We got a little bit maybe too short in the hole again here, and we've had an inventory adjustment. This is what I use settlement for. If we got too short in short time frame, weaker hands sellers here, and they didn't see sellers coming in on the open, they're going to bail out, and they're going to bail out right back to where they basically started selling, which is likely going to be near settlement. So this is an inventory adjustment. Are there opportunities in this? Absolutely, 100%. The opening range is the low of the day. Buyers are in control right off the open. So what am I looking for as far as opportunities is, well, if we continue to one time frame higher, in other words, each 30-minute bar has a higher low and a higher high, I don't want to try and step in front of something like that unless I find some sort of structure with which to lean on, which helps me to limit my risk. How about our overnight high? That looks like a kind of an interesting area. Not overly interesting. Now, there's a lot of targets to look for on both sides of price this morning. We've got an unchecked point of control from last Thursday down here. Okay, 63.82. We've got an unfinished an unrechecked naked point of control up here. These are volume points of control, of course, 66.36. So there's any number of ways and areas that this market can target without really changing all that much. I mean, take a look at what happened last week. We've got largely range-bound rollover activity where there's kind of a little bit random sometimes where the market chooses to go. Where traders are looking is where it tends to run to. So we opened in range and value. That's saying that there's not a real big change in the perception of the value of a barrel of oil. So we're going to be, kind of trying to be patient, looking for opportunities for the market to set up structures for us to lean against to limit the risk. And again, our overnight high could be one of those levels. We're basically trading at the high from Friday right now. Is this going to be a level we can lean on? Is this one of those where the overnight inventory adjustment gives us an opportunity to sell a strength against yesterday's high? Doesn't look like that right now, but we've got our overnight high that is, telling us, hey, we got too expensive in the overnight. This might be an opportunity for us to look for a trade to the short side. If that doesn't hold, there's plenty more areas to look at above, and it can chop you up. Okay, here's last week's high. I'm going to be looking really to be patient, to let the market establish the initial balance or that first hour of trade today. And it's at those extremes when I might find my better opportunities. Better trade locations tend to come when the market opens in range and in value. So we may not yet have seen our best trade location. It might seem that way because our opening range is the low of the session. The opening range low is 64.86, and if that doesn't hold, then there's another area for us to target down here. Our weekly kickoff low, just below that. Our weekly low from last week, just below that. So being in rollover, being largely range bound, tells me I'm going to probably find better trade locations as the day goes on and to try and stay patient. Risk management, as we all know, is always vitally important. If we're going to be looking for longs in this market, well, where we've left the opening range considerably lower, are we going to see an opportunity for us to come back, recheck that opening range, recheck the overnight low, and then have an opportunity to move higher? If I'm going to be looking for longs, I want to buy it on weakness. I don't want to buy it on strength. I feel like I'm buying it on strength if I try and buy it up here. Do I try and sell it up here? Well, maybe we'll get an opportunity to limit our risk at our overnight high. This is what we're talking about. I may be able to risk, if it gives me a close enough or a cheap enough level, I may be able to risk 10 ticks, and it may be worth a lot more if that holds and we start to head down towards this point of control. The point being is I don't have to risk 40 or 50 ticks on a trade like this. I can risk 10 to 15 ticks. And if the overnight high doesn't hold, that's saying something, especially with the opening range to low of the regular trading hour session. So be patient. Be patient. The market opened in range and in value. There's no real major change in value of crude oil. Make sure that you're letting the market show you, hey, you know what? This is an extreme, and you're going to be able to take this trade cheaply. Let's try it. And if it works, you can have a wonderful 3, 4, 5, 6 to 1 reward against your risk on an opportunity like that. Be patient. S&Ps. Okay, last week, while I was out of the markets, of course, we get a pretty decent downside opportunity. We can wait for these big downside opportunities for months, it seems, in the S&Ps. We got it last week. Hey, that's okay. I missed it. I'm all right with that. I can find a new way. I can find opportunities. That's what these markets are. Opportunity machines. So inflation spooked the market last week, of course. Overall, the market state remains strong. I mean, we've got a long way to go before we're going to break any major market state changes. The slowing momentum lent itself towards balancing. Okay, now this big scary downward move, I'm sure was pretty unnerving. We've got weekly kickoff low at 40.70. We got weekly kickoff high at 42.80. We've got last week's range here in purple or pink or whatever it is, and we're sitting right in the middle of all of it. Okay, so we've expended a whole lot of energy. We lost 4,000 in open interest on this move back to the upside. I think we got a little bit too short in the hole down here. I think we got a lot of short time frame and medium time frame traders saying, okay, here's the big one. Let's short everything. Well, I guess that does not work out for them very often. And we've come back and we are, again, centrally located. So we're in balancing. Open interest loss 4,000 Friday is relatively moot. Okay, so barring bad news, what do equities tend to do? Barring bad news, equities tend to just grind higher. Most of the stocks are traded buy side only, so that just has a natural tilt for it to continue to move higher. Are we going to do that now? Well, I don't know that, but with no bad news, knowing that traders have short-term memories, they're going to just if there's nothing bad that comes out, nothing happens, then it's just going to continue to grind to the upside. It's just what it does. We've been saying for weeks the upside momentum is reducing. You can just see it. Direction, balance, overlapping balance, pull back, another push to the upside. Now we get a big push to the downside. All of this activity here is evening inventory. By evening inventory, I'm saying all those that were too long up the top here, they've evened up some of that inventory. All those that were too short down here have evened up some of that inventory, and we're centrally located. So again, this week it has me thinking, I'm going to have to really try and stay patient and look for good trade locations as the days go on. Here's the 30-minute chart. Okay, we're opening in range and in balance. We have a little bit of a gap left from Thursday to Friday. That's interesting. Settlement. Amanda is up here, 41.69. Most of our activity from the overnight was moving lower from settlement. So that's telling us that there's probably some shorter time frame, weaker hands, traders pushing price lower. If they don't get what they're looking for on the U.S. Open, which here I'm getting a little bit long-winded here, is in about 8 minutes, they're going to end up probably getting nervous and pushing price right back towards settlement. Does Thursday's settlement come into play at all? No, not necessarily. But Thursday's point of control, which is a very comfortable, it's kind of the fairest price of the day from Thursday. If the market goes down there, this is a targeted level. This is a level that traders are looking at, and when traders look at it, they tend to make the market go there. Are they looking at it? Doesn't look like it right now. It looks like we've got some overnight shorts ready to bail out of those shorts into the open here and move price back towards settlement. So inside that value area, stay patient. There's a lot of, there's a lot of short time frame levels to be looking at here. Just where the market is, we're looking at, potential short time frame levels and being in control. We haven't quite closed this gap here, so that this could easily be a target for overnight inventory adjustment to come back and close this level. Again, stay patient. There's very little change in the perception of value here. Even if there's no bad news, I'll be probably looking for opportunities to look for longs at some point today. Nasdaq. Briefly in the Nasdaq, again, very similar situation. We've got our all-time high up here. We've got basically some momentum falling off. We've got a couple of good pushes to the downside. That's going to adjust some of that inventory. All of those longs getting out, maybe some shorts getting in. That's evened out the inventory. Again, we've got a pretty tight weekly kickoff range here. 13,513 to the upside, 13,023 to the downside. I like it. I think it's we lost 4,200 again, same number as we lost in the S&Ps, but the S&Ps is a much thicker market. We got too short in the hole here. We're centrally located. I'm going to be looking at short time frame levels to look for opportunities. Look at settlement up here. Okay, settlement is 1838.10. Already, it seems as though some of our overnight shorts are getting a little bit nervous. Look where they're getting nervous. Value low from Friday. Okay, so if we can't push below value low off the opening here, there's a pretty good probability that we are going to be pushing this market right back up towards settlement, or how about point of control from Friday, 13,402, roughly. How about value high? How about 13,421? Or how about our overnight high? All of it is in play. I mean, this is our weekly kickoff range here. Small, impactful. It's going to be an interesting week. Let me talk a little bit about gold here. Gold, I think, is kind of my most on radar product today. Obviously, higher highs, higher lows. Market state is good to the upside. Inflation keeps a bit underneath gold. And with Elon Musk talking about cryptos in the way that he did, that it makes sense that hey, we're going back to the old standard here of value of storing value in gold. We opened above last week's weekly high We got weekly kickoff high above 1882 even. This last week's weekly high is going to be somewhat, I would say, pivotal for us. I'm thinking it's 1846.30, 1846.30, 1847.10. 1847.10, the high from Friday was the weekly high. We're opening above that level. If we hold above it, I think we're in good shape for a continuation to the upside. Pivotal level, last week's high, again, 1847.10, 1847, even close enough. The opening range was initially left at the high of the session. Let's see if that remains. Here's our opening range. Here's our push to the downside. Overnight inventory pushing price back lower towards settlement, unable to close the gap. Now we start to see some buyers come back into this market. If you were to be thinking, hey, you know what, our hulls are kind of holding below value or below price, I'm going to take a look at a long down here. If we can take out the opening range high, that's going to be something that's going to say, okay, we weren't able to maintain that opening range as the high of the session. Something has changed. We may see this market continue to the upside. Briefly, Euro range bound off the radar for me today in large part, just because of the range bound activity. I'm not really seeing anything that's indicating that there's a big change. Look at this small range we had on Friday. We added 19,000 in open interest. We've got a gap here. We opened in range and in value. No overnight inventory. Just a lot of things lining up to say, you know what? Keep this on the back burner for today. If something changes, be ready for it. And I think very similar to the euro is the 10-year. Okay, we've been range bound here for a month. Rates haven't really moved all that for a month. We're centrally located, largely between weekly kickoff high and low. It's because we're going to have to get to these levels and accept above or below them to force longer time traders to adjust inventory. Last week's range is much more reasonable, and I'll look for opportunities perhaps at those extremes from last week. But right here in the middle, not really looking to do much of anything. Okay, opening in range and in value. No real overnight inventory. I'm not really that interested. I think there's other markets that offer bigger opportunities for us this morning. So on that note, I want to get everybody down to business here. We got equities opening up shortly. So glad to be back with you. I always enjoy time away. It's always good to be back. Looking forward to seeing everybody doing well this week. Take your deep breath. Humble, grateful, and creative in your trading today. I'm going to take it easy. Back first day from vacation. Don't want to get banged up, so I'm going to be patient. Look for the right opportunities to come to me. Don't go looking for them, John. They'll come to you. Have a great day. I think I'm going to be back with the market recap today. I think Dan's out for a couple of days, so we'll see how the day played out later on. See you at 3 o'clock for the recap. Until then, trade well, get out there,